Hello everybody and welcome back. Well, the stock market fell in the last 24 hours and came back to a very important zone. You'll notice the wicks and you'll notice the red line, the 20 moving average. This is a super important level for the stock market around the world. And of course it has ramifications through the crypto and commodities markets, which we'll be discussing in today's video. We've also got one of the biggest job numbers in the world coming out this Friday, and that's the non-farms. So what will happen? And will this market crash all the way back down? Or is it about to go and leap forward to a level that we've been expecting for a few weeks now? Stay tuned as we cover it all. See you soon. Well, welcome back everybody to the daily show where we talk about stocks, commodities, and cryptos daily. If you like any of those markets, always consider subscribing and of course smash that like button if you find value in today's video. We'll be going through macro, all of the rotations that have been occurring, and of course a deep dive into a bunch of stocks, indices, and everything else. But let's just talk about the fear and greed index. Of course, still on that side of fear, almost extreme fear here. What did that mean? Well, it's meant that we've got some market pullbacks occurring in, and that has really gone through most sectors. Financial sectors took a bit of a beating yesterday. Energy was up, but the story might be different in the next 24 hours. And again, another strong day out of Amazon and a decent day out of Google, the two stocks in focus due to this split nature moving forward. And we've been focusing them now for a couple of sessions. Let's move over to what actually happened during the session. Well, the market rallied. And it rallied pretty nicely. The Nasdaq was over 1% at one point, but the SP500 hit the resistance we spoke about yesterday almost to the point and then sold straight off. Once it was through that 41.20, it was no stopping it, and it went all the way back down to structure before having a nice pickup after that point. So it was a bit of a wild day if you didn't know which were the levels, but if you were watching yesterday's video, I think we broke it down in some great detail together as a community. So that was pretty good. Let's move over now to the sector rotation. It was, of course, energy was doing the best for the day, a bit of gold moving up there off a level we spoke about. And then also it was mostly risk off from the hyperstock levels. Whenever you see PBW and TAN not doing so well, it generally means hyperstocks are not doing well at all, and all of those are down. But we also saw semiconductors, jets, etc. having a pretty weak session and a weak time in the markets. So what do we expect for June now that we're in it? Well, we have new pivot points, we have a whole bunch of stuff coming through, and I'll show you that later on. But what I wanted to discuss really was that we do have usually a weak month. Now, June can be weak, and it has been weak in midterms usually, but we've never seen a May so weak. And that was the back of April also so weak. So are the seasonals working? Well, it depends on which ones you're really looking at. And I think in this year with the current information, it's not just a standard midterm year with standard problems. We also have inflation. We saw that, of course, in the April stats and figures and what ended up happening there. So June is historically a little bit of a weak month in midterms. That being said, I'm just bringing it here. And of course, the past 10 years, June's been pretty strong. What is pretty clear though, is July has always been a very solid month in the stock market. So considering where we are, considering what we've dumped down to, could June be the new July? It's starting to look a little bit that way. Let's see what happens next. Another thing I want to mention about was the 420. You can see here SPY gamma levels. Current expiration is sitting around that real big 420 level. So you can see 420 super important zone. That's exactly where the futures market got to earlier before the US markets open this week on that Monday. And then where would we be ahead of non-farm payrolls? Could we be sitting at 420 ahead of the Friday number? Could it actually buy up that much into that level over the next 24 hours? 420 is going to be a massive resistance. And as we know, after that point, if we break it, 430, 429 becomes the big level. So 420, a huge zone here for the markets moving forward. It's nothing new. It shows up everywhere now on the charts. Let's get into the charts. Speaking of that, we'll talk about fear and greed. The VIX. Yeah, the VIX is back down on the support. So every 5 level, that is 25, 30, 20, all of these zones are really important. You guys know that I love using 35 as kind of a peak level to find out whether we have capitulation or maximum fear in the markets, and it can be a good correlation. But the VIX, remember, helps you make a decision on what type of instruments you might want to trade and the type and style of trading you want to do. So if you want to be a day trader scalper, when the VIX is high, would that be a fantastic time to day trade and scalp? Absolutely. Being nimble and being fast is good. Would you want to swing trade during that time? If you ever wondered to yourself, why do I lose so much when am I swing trading? If the VIX is above 25 especially, that's a time you'll usually get bashed around during swing trading methods. Let's now take a look at the support that we've found here. So 25 is a support, VIX continuing to decline. If it gets through this level, where does the next level happen? Is it around that 20? I think that probably is the bigger point here, and that's what a lot of people are going to be discussing. We go through 25, we move down to 20. That usually means fears coming out of the market, and it's a strong sign that we're in for a bit of a bull run, at least in this current pickup, before potentially a bear bust later. The PCC puts were on the agenda in the last session, and this is probably a positive thing also for the bulls out there if you're in a bull kind of mindset. The puts were going up. That's good, because all of a sudden we saw too many calls coming into the market. Not necessarily fantastic. A lot of people were very, very bullish. It's not really good for everyone to be bullish. We want people to be more negative on the markets, and we want the price action, that is the movement of the markets, to be going up at the same time. If everyone disagrees and the market's going in one direction and that's against general sentiment, well, guess what? Price is going to win in this aspect. US 10-year was up. Of course, another day where inflation is kind of back on the agenda at this stage. And it's not unexpected it gets up here, but as we mentioned, this level was pretty important, the 2.87, and now if you are believing the 10-year will turn around, which I'm really mostly a believer of, I think it should happen around 3. So we'll be watching that over the next couple of days, trading session into the non-farms. Another thing that has occurred is the US dollar, or the DXY, has strengthened. This was our expectation the whole time. It bottomed out here. It was a very aggressive sell. It's now taken out some of these points, and I could see it really moving towards that kind of 103 zone. So there might be a little bit more in the US dollar here, and it looks to be trying to strengthen as much as it can to really find some resellers. I mean, it was such an aggressive sell-off. Time to come back. This is a good zone. A lot of wicks, a lot of dojis, those types of things sitting around there, and it kind of is a good point where you could see turnaround in the dollar index. Now, what was in some ways surprising was that gold did so well. So these were the two levels we had highlighted in the previous video. Definitely go back and watch it if you'd like to, while we were talking about these zones. But it did bounce off here. We saw some wicks. We saw some previous orders most likely sitting around this area, a bit of demand. The market did a little turn on the small time frames, which we'll look at, and that led to a fairly nice, significant rally up. Now, does this mean this is a real rally that's all green, all good? Not necessarily. I've got a line up here, 1856. I'd want to see gold through that, then a pullback, and then we can return back to going bullish. At this stage, it just seems to be a move, and the overall sentiment, at least on some time frames, has currently changed to the downside. So even though we like this level and we like this level towards buys, we don't know that we're out of the woods yet until we get past some of these zones. So let's break it down just to a 1 minute chart here and have a look at gold, because I thought it might be a good one just to jump into and have some analysis thoughts on it. So there's a few things that occurred here on gold. The first thing that occurred was that the market made a lower low. So you'll notice here it was kind of going trough, lower peak, etc., and made a lower trough. Then we had some stabilization down here. Some people would look at that and say, oh, it looks like market structure. Sure, it is market structure to a degree. And then we saw a bit of a rally, and that rally broke through the last lower peak, and it went pretty ballistic and went really far up. At that point, what you can do is you can kind of say, all right, well, I knew that it was going to go long once it breached past this point. But what you have to do, and why you have to be patient, and this is what I would probably say is one of the cardinal sins that most people make when it comes to scalping, is they aren't patient and they don't react, they try to predict. So patience, react, don't predict would be something that I'd almost write on your charts. When the market came back down, it comes back to this point and finds some buying pressure. And you usually expect the market after a turn like this to come back down. So if you were looking at this market saying, oh, I missed out, you could have easily come back in around this zone with all of the previous supply coming into demand now, and then tested that area for your long for the day. So if you miss it down here, for whatever reason, you're not in the small time frames, this is where you get that buy signal, but you don't fall into the FOMO hype. You want to pick it up later on. And that's what happened here with gold. And of course, it went back to test that high, possibly some good risk reward in there. Another one we've been doing here is US oil, and US oil had a really great turnaround story on it. Of course, here is a market which I'm basing on other external factors, you know, on a 3-month kind of outlay, but we had a breakout. And I cautioned very much, I think we all cautioned as a community, that oil was looking very sneaky. And there were a few reasons why, notably this one over here. So oil broke out. You'd think at that point, oh, we're going to 124. Fair enough. Usually you would. But since then, it's had 2 rejection candles and it's starting to look very weak. So I'm still not a big fan of oil and I still caution against it at this stage. I think things are unclear in this market, but if you're looking at the reality, the trend has changed on at least the 1 hour towards the downside. So at this stage, the 1 hour and probably, let me just check here for you, the 4 hour have also changed towards the downside. So both markets, the 4 hour, the 2 hour, the 1 hour, all of the ones underneath are currently in downtrend. And we'll see what happens over the next 24 to 48 hours ahead of the jobs numbers. Tesla, another weak day for it. That's 20 moving average is too much for it at the moment. That's the red line here. You can see when Tesla last broke the 20 moving average, it went ballistic. Now to break a 20 moving average, you actually need to close above it. So like over here, where it actually closed above it, that has that slingshot momentum. And if you think about Tesla in the past, look at the 20 moving average here. Very good at holding it. Very good at holding it. It specifically loves it. So we get a green candle above here, another good sign that the market's willing to go higher. Next stop for Tesla up there would be anywhere between this 850 and 950. I'd probably target in those highs a little bit more. So Tesla could have a good trade on it. And some people will be saying, is this like some inverse head and shoulders starting to set up? Could well be. So if you break through the 20, fairly big deal here on Tesla stock. And I think that's probably the biggest analysis of the day. Amazon hit the resistance. So Amazon came back to effectively this area. This is also a supply zone for people that understand that kind of logic. And this area here had some sellers there. So Amazon's done a nice job. It obviously had the double bottom, breached, moved into here. Decent sell-off. If you're thinking about even more longs here, most people will want to see it get above this rejection candle because there are orders here and they're going to try to defend that area in terms of the short as well. I could see a little pullback followed by hopefully a rejection move forward. So Amazon and both Google still holding up fairly well considering because of the split announcements moving forward. So remember, splits are there. They do tend to bring decent stats with them. Let's now get into the broad market. So first up, I thought let's bring in Dow. Dow's always important, though it's lost its importance over the years compared to the SP 500. And you'll notice it's holding as best it can above the 20 moving average. There it is, previous resistance, previous kind of demand zones as well that have gone through all of this past. So it's still holding a very good area. And some people will draw things like fibs as well from the bottom to the top. And they'll say, well, we're in the 23.6 fib. Another reason for us to like this level. Sure, it's not too bad, and the 20 moving average is holding up for now, so that's a good sign. Let's move over to the DAX, the German market. Well, it's just coming back down. We've got a bit of a resistance zone here, 20 moving average. It had a nice spike out, hit that first level, which over here certainly is a bit of a problem zone. I would say there's some supply there. And the market's turned around, and does it now come down and then rally back up? Remember, we have the inverse head and shoulders pattern. We currently have broken, we've hit the first level, and now we're pulling back. So we could expect potential imminent turnaround as a potential here for the DAX moving forward. IWM, still very weak. We've talked about this many, many times. Go back and watch some of our videos, especially the one where we did the leg analysis. So we talked about the moves and the generalized, basically, moves that happen very, very similarly to each other. So the movement down and then the movement down again. And at this stage, what we've got is very similar pullbacks. So the pullbacks are pretty close. If IWM can break this high about 189, that'll be a big deal. And we could really see a bit of a rally again through the markets there. Nasdaq, not much to comment on. It held up surprisingly well. It did kind of do a miniature change down here. So this is a little disturbing where it went in terms of the low and the rally, but I'm not going to trade the Nasdaq, or at least use the Nasdaq as our main, I guess you would say, lead at this stage. The Nasdaq has a real way of false breaking all the time. Anyone that's traded Nasdaq in the comments down below, you'll agree the S&P 500 is smooth and it usually gives you great levels, and the Nasdaq is like the crazy one. It kind of breaks things, it gets past zones, it triggers a lot of orders, and then it goes off. So if you ever wondered why the Nasdaq's treating you bad, It's because it's only one market. It's really just the tech and growth side. Whereas the S&P 500 is more diverse, it tends to really hold up a lot better in the technicals. If you want to trade Nasdaq, look at the S&P, find the signal, find the direction, and then come back over to the Nas. It tends to work a little bit better. But I'd love to hear your comments on what you believe about that in the down below links. Let's now move over to the S&P 500. What happened here? Well, it pulled back, and it pulled back to a pretty important zone. You'll notice these wicks previously. Wick purchasing, wick purchasing. So this is a big zone, and it's also just so happens to be a 20 moving average exponential. So we've pulled back, we've gone back to that zone that we spoke about, and I'll bring up the futures just so you can see everything that happened. So here's our 38.2 fib. I could still see the market potentially trying to test that 40-50 zone. But everything that we talked about yesterday pretty much happened. We had a whole bunch of different movements. Let's go down to the 1 hour. So the first thing that we spoke about was this 41.67 zone. We spoke a lot about how that was the resistance that if it was cleared, the market would like to gravitate up, and at that point gravitate towards 42. Potentially we see the non-farms number, and then we would rally through. Now that didn't happen. Of course, it sold off that zone. Where were the big sellers? Well, they were all sitting around here. And this was what we call a defended area. So effectively this defended area sitting around 41.28. You'll notice there was a lot of buying there previously, and there was a lot of purchasing. So no little wonder that when the market did turn around after coming down to our box structure down here, where did it go straight to? The defended zone. Where did it short off? The defended zone. So this is a super important level now for the next 24 hours. You'd want to absolutely be watching this area. And if we break and close above, we do quite a few changes. We don't change everything. We change, but we do certainly start to push forward. 41.67, don't take that off. I'd say that's a very big important level to really solidify the bulls are back in town. But let's now scroll down into the 1 minute and have a look at the last session. Did we see anything of interest? Well, I think we've seen two things of interest. The first one was over here in the sequences. So the market obviously was weakening. This was a whole bunch of orders for sure. There's pretty good short off here once it comes back, if you understand the markets. The market then moved down, trough, lower peak, lower trough, and then sequenced back up. Now, once that happened, you can actually expect the market to return. Again, patience, reaction. That is, we want to react to this move and understand that when that occurs, if we missed it and we come into the back end of the session, well, suddenly this area here becomes quite purchasable. And that's what suddenly is happening here in the Asian into, of course, London sessions. That is the futures market. Market is showing some strength through this zone. And I think that's pretty important around that 40.88 kind of area. I would expect that to hopefully be held at this stage. And if we break below, of course, next stop, 40.50, clean that gap all the way down the bottom and go from there. So markets are starting to look a little bit better. Key zones to watch, of course, 41.28. You can see that over here, this level in general, and then of course the 40.50 down in the below. We're still in an uptrend at this stage, at least on the smaller time frames. We are, well, when I say smaller time frames, 1 hour, 4 hour, those types of time frames on the SPY. And at this stage, we're still bullish for now. Now, a lot of people say, Tom, the bearishness is coming, Elliott wave, all of these other things, we're in wave, this and that. We're not seeing it just yet. So hopefully we can remain bullish. I'd like to see a bit more of a pickup before the bears come back in to really smash this market around. And I think we need to put things in perspective. Always go back and put it in perspective. We saw a move from bottom to top that was 9.24%. There were relatively little pullbacks. So we've taken off so far from the top to here, realistically only 2% of that move. Isn't that pretty normal? I'd say yes. So let's find out what happens here. Non-farm payrolls on the agenda for sure. Let's move over to Bitcoin. Bitcoin shorts continuing to kind of hover down low. However, Bitcoin hasn't fared too well. It's sold from, funnily enough, the area that we were talking about together as a community, 32,000. It was a big zone. I can absolutely see why shorters came back in here, and it totally makes sense if you understand what this structure was telling you. So the shorters have come in, but did they just hit a level that of interest? Right here, you'll notice the volume profile kind of says that's where a lot of orders lie, around that 29.2. I'd be looking for turnaround stories here. So something like movement up, movement down, movement up, that would be pretty good. And I would really be focusing in on here the markets themselves. If the stock markets turn and let's say we see a new peak, or we see they're moving up 1 or 1.5, especially the NAS, Bitcoin and the crypto markets may just be in for a recovery. We've tested the 32 now once. If we breach that, it's on. And I would say buyers come back in, push towards that 38, 40,000 at least in terms of the technicals. Now, if you haven't already, come and follow us over on Twitter at FX Evolution. We're definitely posting there more and more and more, and we'll be posting a lot more soon. And of course, for the economic outlook, we've got 8:15 a.m. New York time, ADP non-employment change. The first number doesn't really usually mean the real number, but it might move the markets. And then we have non-farm employment change. This is the big one, 8:30 a.m. Friday. This is one of the biggest jobs announcements in a while. And expect this to be the number everyone talks about in the media in the coming months, as we see businesses starting to potentially fire people. This is going to be the story. We already know it's there. Anyone that understands economics will know that all of this stuff that's gone on the stock market is going to have ramifications in probably the hiring market. We are going to see businesses start firing people as they tighten up. So what do you guys think is going to happen with the jobs number? Is it going to miss? Is it going to be hitting? Let us know in the comments down below. And as always, subscribe and smash that like button if you enjoyed today's video. See you soon. Bye for now.